So, Tom, not all businesses are at the same point in the life cycle. We have, brand new businesses, and then of course we have really well-established businesses. So, why don't you kind of share for the well-established businesses, and they're thinking about making a banking change? What are some of the key factors they should be thinking about?
I think a business really wants to understand the bank that they're talking to. Do they have experience in their industry?
Right.
Particularly if they're going to be looking for some credit, for
Right.
some loan products.
Right.
So I would ask them, do they bank other companies in their industry?
Oh, great
And what
question.
experience do they have? Another question I would ask is just asking the prospective banker about their background and their experience in the industry. And because that banker is going to be their advocate. They're going to be the one that's going to, lead the charge
Right.
for them. At the end of the day, when a bank is making a loan decision, it's a risk-based decision.
Right.
So if the banker or the bank doesn't have experience in their industry, they're going to view more risk, and that's going to factor into how they're thinking about that decision. Another thing I would encourage business owners to be asking is just simply understanding the relationship aspect of who's going to be their banker.
Right.
Once everything's settled, the dust settles, who's their contact?
Right.
And are you calling somebody direct, or are you calling a 1-800 number?
Oh, great point.
I'm not saying we don't have any 1-800 numbers here at the bank, but that is not our primary channel for customers to solve problems.
Yeah. There's not too many cell phones that start 1-800.
That's right. Exactly. And every one of my customers has my cell phone number.
That's
to
great.
your point. Yeah.
Those are just great points. For a new business, as you were talking about established business, I was thinking about a new business, and I think new businesses, and in the area of the bank that I lead, we see a lot of brand new businesses, especially in the
Sure.
micro segment. These
Mhm.
are these are baby businesses.
Yeah. Love it.
Yeah, and so it's so fun to hear some of the innovation and creative ideas that these folks who are starting really on a wing and a prayer in
Yeah.
many cases. And some of the questions I would share that they should be thinking about are, number one, does your bank loan to brand new business entities? Because many banks don't.
Right.
Of course, from a risk standpoint, that's when a business is most risky, right?
Sure.
It's brand new.
Yeah.
So there are lots of type of products, namely through the Small Business Administration, SBA loans,
course, yeah.
that are terrific accessories to help financial institutions grant credit to these brand new businesses. But if I'm the business owner, I'm going to say, how many SBA loans do you
Yeah.
make? Where do you show up on the ranking,
Yeah.
which, by the way, is published?
Are you a PLP lender?
Are you a PLP lender? What does that stand for?
Yeah. Preferred lender program.
Got it.
So in the world of SBA, banks can become a PLP lender, and they can then make loans on a more fast-track basis with the SBA. And it just shows that they have a lot more experience in doing SBA loans. So
It means they know what they're doing.
knows what they're doing. You really
it.
want to be dealing with a PLP lender.
Good. And then how, if we can't do it through a traditional business loan, is there a way to do through a creative credit? Sometimes folks use equity in their homes. Sometimes
Sure.
they use other means to get credit to grow that business. And I think a bank that's able to be creative in that process has tremendous value for a brand new business.